Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management, and thanks for joining us again here this week, where we take a deep dive into everything going on last week, coming up this week, and just keeping you informed on what's going on in the markets. As always, keep in mind everything that we cover here is for information purposes only. Do your own due diligence or talk to a professional regarding your situation to make sure any strategy or any topic that we cover here is right for you. Feel free to reach out to us. We're always happy to help out and answer any of your questions. As always, you can ask questions during this is a live showing. You can ask questions, hit that Q&A button, try to get to them today. If not, we will definitely follow up. If you're watching this on one of the replay or you're listening to our podcast, by all means, go to mikeonmoney.com and ask us any questions you have, how does it pertain to you, or even topics you'd like to hear us talk about a bit more. We're always happy to hear those and try to address those as best we can. On that, I'm going to take a moment here to cover off a couple things that I've first of all, let me first of all talk about last week. So for those of you who joined us last week, apologize for the technical difficulties we had last week. There's some sound issues, there's some visual issues. I work off 3 different systems, working from home, working from the office, so I'm always jumping around. So I apologize last week. I kind of had the settings off. So thanks for your patience last week, and hopefully you were able to still follow along as we went through things. So with that, it's a perfect segue into our topic for this week. We're going to be talking about technology, investing in technology, especially for 2021 after what we saw in 2020, obviously being one of the top performers there. I want to talk a little bit what we see coming up in 2021 or how we're playing that for this year. But before we dive into that, I've had several people reach out and want me to cover off the topic of GameStop or the Reddit phenomena that we saw in the past week. I did talk about it last week. I touched on it. I did a standalone video on bubbles, investment bubbles in the market. And I did a follow-up part 2 last week that specifically talked about the GameStop and Reddit situation. Obviously, it's progressed a little bit since then. So just going to quickly go over it. So if you haven't followed, of course, this was the phenomenon where the big hedge funds, mostly in the United States, one particular one called Citrix, out of California, came out with a big short on the stock GameStop. So GameStop is a retailer of video games. The brick and mortar has not been doing well. Its stock, 6 months ago was at $4. It did go up to $20, and that's where they came out and said, hey, it's not worth $20. We're going to short, so that means that they're hoping for it to go down. They will make money if they sell it at $20 and buy it back cheaper. Basically what they were doing. And the people of the internet, the subreddit, this forum online, took exception to that and decided to try to beat them. So they encouraged everyone to go buy up the stock GameStop, which actually rallied it from that 20 all the way to a high of just, I think the high was about $450, definitely over $400. No matter how briefly that's as high it got, it didn't necessarily close at that level. But it got up that high, and that caused a short squeeze. So all those people that had sold it short at $20, hoping for it to go back down to $4, they got squeezed, meaning they lost money as it went up, to the above $400 level. And some of them had to buy in at that high $100 levels and take a loss through that process. And it was kind of the common person against the billionaires. We're standing up for the right. Where the billionaires have been making all the money over the last year or decades, or however you want to look at it. So, I guess the question I've been given is what's my opinion of this? Well, one, there's definitely no love lost for these hedge or short funds. They have been, aggressively going after companies where they will they will publish a negative report saying we're short in this, this is why, and they encourage all their buddies and their friends to go short the stock to drive it down. So the only thing that the Reddit community really did was the opposite. They just encouraged all their friends to go buy it. Now there is inquiries happening into this. I don't think there's going to be much come out of it. You know, talking about market manipulation. Market manipulation is only if you lie. So you give misinformation. So you say, go buy this because of this, or go sell this because of this, and that fact is not true. And you encourage people to manipulate it. Or if you're selling it in one account and buying it in another account to manipulate the price. So that's not really what happened here. Just a lot of volume drove to the market, or all at once drove that price up. So kind of good for the Reddit community. They sent a message. They sent a message to Wall Street. They sent a message to those hedge funds to say, hey, you guys have been doing this for a lot of years. It's ethically, it's not seen as great inside the industry, but it is legal, and that's what they do. So they came back and they had a win. So a bunch of people made a bunch of money who kind of got into that Reddit early, or got into that GameStop early. Now they tried it with a couple other companies, AMC, the movie company. Yesterday they tried it on silver. Well, the last couple of days, I guess they tried it on silver. But what the big problem with this, or the big challenge with that approach, is it's not really sustainable, because they were able to move GameStop because it was a lower volume stock. Now, when I say lower volume, it had enough volume for them to buy, because if it's really low volume, there wouldn't be enough for them to drive up the price. So it was low enough volume that they could get access to stock, and they could drive it up quickly. And they drove up the volume, and it's just supply and demand, more and more people buying. And of course, as those shorts had to be covered, so they had to go buy, and that drove up more volume. And so it drove it up quite a bit. But you can't do that with every stock. If you have a stock with massive volume, it would take massive amounts of cash or investments to move that stock. So, the Reddit community obviously has a limited amount of capital available to them. So it worked quite well on GameStop. They also did to BlackBerry and AMC to smaller extents. They tried on silver, as I mentioned. It doesn't look like it's really taken hold on silver, because it's a much bigger market. It's hard for them to buy up enough volume to really move it, especially the amounts that they move GameStop. And on top of that, what we're seeing today or the last couple of days with GameStop is it dramatically fell. Off that 400 high to just over $100 last time I looked this morning. And that's, again, it's that sustained amount of volume. How much cash do they have available to continue that buying volume? Because without that, eventually it's just going to slowly go back to norm, right? It's going to return to normal. So basically what they did is they created exactly what I've talked about in some of the videos, is that artificial bubble, or that bubble in the market. It went up, way overvalued for what it was, based on speculative demand. And then as soon as that demand slows down or dries up, it quickly drops. And that's the definition of a bubble in market. Maybe not as the bubbles in market aren't as intentional as this was, but definitely that's what we saw happen. So when I look at that, my opinion is, I'm like, good for them, those who made the money. I do feel really bad, because at the end of the day, someone's going to be left without a chair. Someone went and bought that stock at $400 and $450, and it's down on $100 now. So someone got left out of the game. And it's probably not going to be someone who can afford that big drop. And that's the part I feel bad for in this scenario, or any of those scenarios, those bubbles or overvaluations, is, do they understand the game as well as they should have? And can they afford that hit to their portfolios or to their investments? So that's kind of the big concern around that. The other thing is, the win that the Reddit community had. I mean, there was losses on the books for billions and billions of dollars for these hedge funds, but the likelihood that they covered their short somewhere along the ways up, took that loss, but then re-shorted it again, you know, when it was above $300 and it's down at $100 now, maybe going lower. Don't know what the days ahead are going to have, but they've probably made a bunch of that money back. So yes, it sent a message. How big was the win? Only history is going to tell there. But I'm not overly concerned about this in the broader market. Obviously, we'd be very cautious of any name that had that kind of performance or at that kind of volatility, and why. And if you go listen to the video at mikeonmoney.com for the when we talk about market bubbles, is know why you're buying the stock, right? You know, understand the value, understand the earnings, understand the market potential before you go buy it. And if you do that, well, then the likelihood of you getting caught in that type of frenzy is unlikely. And if you do, hopefully you're in really early and you're able to take advantage of it. So with that, I'm going to go back to our regular share here, make my head a little tiny thing instead of full screen, where we can talk about what's actually going on in the market today or this week. So let's dive into things here. There we go. So what are we looking for this week? Again, earnings, I talked about last week, earnings are coming out. They continue. ExxonMobil is coming out with their fourth quarter. Very likely they're going to post a loss. In fact, one of the probably the biggest, sort of the first loss they've ever recorded in history, just because what happened to oil in 2020. Remember, this is looking back a quarter, not looking ahead. So it doesn't necessarily mean things negative for the company, just simply they're likely to post a loss. We're also seeing a get together with the heads of NASDAQ, the Economic Club in New York and the Fed Bank of New York, you know, just to talk about you know, what they see coming up in the economy and what trends they want to set for rebuilding the economy moving forward. We also, Amazon's coming out with earnings, and Alphabet are supposed to announce as well. We'll talk a little bit more about those. We did see stock futures rise a bit on Tuesday, and that's, you know, kind of this continued decent growth in the market, although we are seeing a little bit of shift in where that growth is coming from, and we're going to cover that in this week's topic. And as I mentioned, Google's parent Alphabet's going to announce as well, which is supposed to do well. You know, the futures on S&P is also grown a bit, 0.8%, Dow Jones 0.7%, and NASDAQ 0.8% as well. A little bit of repeat earlier this year. It's Groundhog Day, by the way, today. Happy Groundhog Day. Although I'm less worried about what the groundhog does. I'm more concerned that whether Bonnie Henry comes out and sees her shadow and we have another 6 weeks of closures. Maybe she won't, and maybe we'll open up sooner than later. We're seeing other things in the market, you know, delays in the U.S. and China investment ban. So this goes back to the Trump era, where the U.S. was blacklisting some Chinese investments or companies from U.S. investors taking advantage of or investing into, you know, the basis of national security. That's been delayed a little bit, which kind of leaves some investment companies in limbo, where they're saying, you know, the rest of the world's been able to take advantage of the growth in these companies. We aren't. So the Biden, you know, just one more thing for the Biden administration to deal with. GameStop, as we talked about already, you know, it's, you know, the new U.S. administration had a pledge for, you know, ethics and being transparent. Obviously, this is the first thing they got to deal with. And it also stems into how some of the brokerages acted, specifically, you know, targeting the company Robinhood. Robinhood was probably the most popular platform for that Reddit community to do their trade-in. It's an online trade-in platform where, you know, their whole message was they brought the market or access to the market to even the smallest investors or you know, the common man, you know, steal from the rich, give to the poor. Although I don't know if they're all poor on there. But anyway, during all this, you know, rally up, they shut off trade-in. You were able to sell GameStop, but they shut off buying for GameStop temporarily or started limiting that trade-in to them. And of course, they're calling foul, saying, you know, they stepped in to protect their partners in the hedge fund industry or Wall Street. I don't know that that's the truth. Seems like everything is conspiracy theory these days. As soon as something's not the way someone wants, it must be a conspiracy against them. There are actually, when in situations of extreme volatility, there are triggers in firms and in the exchanges to turn things off temporarily in order to allow news to disseminate so that everyone has a fair playing field. So, an exchange, for example, the Toronto Stock Exchange, if a stock were to move dramatically, certainly the amount that GameStop has moved. In fact, the New York Exchange did stop several times the trading on GameStop because it was moving so much in volume and price. They stop it for whether it be the company to come out or for them to come out and say, hey, this is why it's moving. There's been news, there's been a development, or there hasn't been. And it just lets everyone pause for a second and digest that news so that everyone's on the same playing field. Of course, this wasn't because of news at the company, and GameStop came out several times and said, not us. There's nothing going on at the company that would justify this. But of course, there was the whole Reddit thing going on. So there's this call of foul. But these things are in place. Now, I'm not saying that's 100% what or 100% the reasons why Robinhood themselves put a stop in there. They are scheduled to testify in front of Congress, or the CEO is going to testify in front of Congress on February 18th, and hopefully he'll provide some more insights. But I would more lean to there's probably business or regulatory or just other reasons behind that, other than they were necessarily protected Wall Street, because as I said, Wall Street probably took advantage of those high prices too. So, there's probably more truth behind what we know already, but at the same time, I'm not sure if I buy into that conspiracy theory. Reddit is coming for silver. This was as of yesterday. Are they going to cause a short squeeze? Really unlikely. Again, well, silver is not as shorted as much as GameStop was. GameStop was one of the highest shorted stocks on the exchange, which actually led into part of the success of their rally there. Plus, as I mentioned, the liquidity around silver is far too high, I think, for the community, the size of the community that the Reddit is, in order to more than edge it up for a couple of days or even one day, as it did pull back this morning. Again, how this will play out, we'll keep a close eye on, but for the most part, I don't think they have enough volumes to take on something as big as the silver market. That being said, again, the smaller volumes, more targeted approach might still work in the future if they continue on this strategy. By the way, on those Reddit things, yes, the IROC and the CSA, the Canadian Securities Administration, said they were going to look into that, to possible market manipulation. Again, what they're looking for, though, is something online of someone misrepresenting or misleading investors. Just saying, hey, we should all go do this isn't misleading anyone, but going out there and saying, hey, this company's going to get bought out, insider information or any sort of misleading information to cause people to think they should go buy it. Is what they would be looking for. And so far, I haven't seen or read that there's any kind of proof or substance to those kind of charges or facts. Anyway, moving on from that, U.S. factory activity cools down amid COVID-19. Yeah, of course. I mean, we saw that in the last quarter last year. Going into November and December, those numbers slowed down, of course, with the COVID pandemic flaring up. The same things happening into January. We're definitely seeing things kind of slow down a bit more again. Robinhood, going back to them, they're out there raising some capital, to fund, of course, the frenzy of all this buying, because securities firms, when they're doing transactions and they're bringing in more assets, there is a capital requirement for people to do that. So you have to have cash in the bank. in order to secure those transactions and secure those holdings. So they're out there trying to raise some capital. They might have some trouble because they got a lot of backlash rather from their investors due to the turning off that GameStop trading, and that might lead to them losing losing a lot of clients. So we'll have to see how they do with that debt raise. The Congressional Budget Office is coming out with a forecast. The U.S. economy will grow by 4.6% after contracting 3.5. That's going to put a lot of pressure for Biden to get his 1.9 trillion COVID-19 aid plan approved. And this we've been talking about this new administration that they've got a lot to deal with. They want to deliver on everything that they promised, for sure. Well, hopefully that's what they want to do. But at the same time, they do have a split Senate. So they have to be, cautious about what they try to put through, and also, the fine line between spending and stimulating the economy. So bringing the economy back, because the whole idea is you don't want the economy to come back just because you spent money, which is what we saw in 2020. Any economic recovery we saw last year was on government spending. What you want to do is strengthen the economy so that the economy is funding that growth. So that you don't have to continue to spend into it. So it's a really fine line, and obviously it's going back and forth right now with this stimulus package that the Democrats are trying to push through Congress and the Senate. Once United's board of Biden environmentalists and unions are clashing over the pipelines, this not a big surprise. Biden came out day one and canceled the Keystone Pipeline project. There's a lot of environmental pushback on that. The territories it was going through and the land it was going through, basically going from the oil sands of Canada all the way down to Texas ports. Excuse me. But of course, when you cancel that, that's jobs lost or potential jobs lost. And the unions are pushing back. Mentioned last week, less affected in Canada. Because we actually have another pipeline project that's moving through. It looks like it's moving ahead, and it was a short piece of pipeline in Canada versus obviously much longer pipeline in the United States. So Canada's moving ahead with other projects and jobs and potential, but in the U.S., obviously the unions find themselves with opposition, with Biden's administration right off of day one there. Trudeau came out, has announced a new deal with a pharmaceutical company called Novavax to produce the COVID-19 vaccines here in Canada, which is good news. As you've probably been following in the news, there's a lot of battling over supplies, not just from the manufacturers, but countries. The U.S. want to be U.S. first, so any vaccines produced in the U.S. They want to keep. Europe's talking the same thing. Everyone's fighting for supply right now, so being able to produce them here in Canada, where we can have a Canada first approach, is good. So they're moving forward with the facility in Montreal, where they're hoping by summer, I think the number of something like 2 million doses a month that they're going to start to produce. And the other thing to keep in mind, the benefit of this investment, or having this production in Canada, is the likelihood that moving forward, this is going to be an annual or continuous vaccine. So it's not a matter of, hey, everyone's vaccinated, we can just turn off and shut down the plants. We'll probably have, much like a flu season, where there's a vaccine, very likely to have a COVID vaccine annually, or certainly for the higher risk groups to have a continuous need. So I think it's a good idea, and obviously good for Novavax, as their version of the vaccine has just gone in. Testing is just completed and gone in for approvals. So let's take a look at the economies right now. As I mentioned, Wall Street has bounced back. Mining shares doing quite well. Silver, obviously a little bit of frenzy. I mentioned yesterday after the Reddit, although silver and gold had already been moving prior to this, it has pulled back a little bit today, with that volume falling off. But obviously, continued focus on silver. That wasn't new though. That's been going on for about 6 months. Just got a little bit of push from the Reddit community. Treasuries fell a little bit after slowing last month. Oil gained a bit as crude inventories fell. For basically winter demand rose because all these snowstorms, especially back east, and the U.S. dollar gained slightly, and so did gold, just on the inflation hedge. Now these two are in battle with each other, especially in battle right now, given this next stimulus package. Of course, the stimulus package would devalue the U.S. dollar a little bit more as they print more money and push gold up. But if the package has problems and it's not as big as expected, that could give a little bit of strength to the dollar. But at the same time, it would still drive inflation. So, gold prices still moving. Pfizer's going to report their fourth quarter earnings coming up here. And obviously this quarter will be heavy with the vaccine deployment, as well as the German partner rolling out their vaccine or the same version of the vaccine. In Europe, in several countries, it's going to be focused on those sales and see what their next year's forecast is. Amazon's coming out with their fourth quarter as well, to look at the sales on their Prime Day event, which is the big sale that they do every year. Has it attracted more shoppers? How many more of the homebound buyers do they flock to the website? Numbers are expected to be obviously fairly strong as the pandemic has kept us in longer, and more online shopping. I've said this several times, especially over the holiday season. The more we stay in, which is good. Obviously, we're trying to control this, but there's those local retailers, those local restaurants. I do recommend, obviously the Amazon shopping is super convenient. But a lot of your local stores and business owners are doing curbside pickup, are doing delivery. Do recommend to reach out to them, for your shopping needs, to help them out. Because at the end of this, we want them to succeed and be there, especially when things start to reopen again. Alphabet, or Google's parent company, one of the biggest world global suppliers of internet ads, is expected to breach 50 billion in the fourth quarter, as the companies have shifted, obviously, through all this to more online advertising and digital spending. So we're going to see their earnings out as well. I mentioned Exxon is going to report here. It's fully expected that they're going to see a slump, due to write-downs through the oil crisis throughout 2020, or the demand crisis, I should say, excess inventory. So they're planning to do that. There's some talks of Exxon and Chevron potentially in merger talks. Those rumors are largely just that. Some even speculate that they leaked those rumors just to ease the impact of the write-downs that they're going to take. I don't know if that's necessarily something that's going to go through, and nor do I necessarily think that the write-downs are going to be necessarily a bad thing. It was a bad year for oil. That's in the past. They write those down. I think it's going to be a challenging year. We've talked about oil a lot. It's going to be a challenging year for oil. But if we do start to get the vaccine out and we do start to move again, obviously, or travel again, or people just getting out more, we will see that demand eke up a little bit over this year. Again, GameStop in all the news. Over half the shares that were shorted have been covered in this past week, but we have not got the latest numbers of any new shorts, so we'll keep an eye on that. EU is in constant battle. Antitrust is big. EU or the European Union have a lot more antitrust laws, or aggressive antitrust laws than I'd say North America has. So that's why we see a lot over there in court. In recent past, Apple lost a tax judgment, I want to say it was 2019, for about $16 billion that they owed in taxes over in Ireland, where they were kind of using a tax haven over there. And they got that overturned, and now the latest appeal is that there was an error in that overturning, so it'll go back and forth. I think we're going to see a lot of these antitrust cases. We're already seeing Google antitrust. Facebook's in an antitrust. I think that's just going to continue. Amazon's in one. Is going to continue here over the next little while. And it's kind of a normal, I should say healthy, but a normal business cycle where, you know, the big, huge giants acquiring, get bigger and bigger and bigger and grow. And then, you know, the antitrust will look at them and decide whether, you know, there's anti-competitive things happening in there. Then they break up a little bit, and then, you know, they grow again. It's happened to Microsoft in the past a couple of times, happened to IBM in the past. It doesn't necessarily mean bad things for the company in the long term. It just means changes. So you know, obviously going to follow the antitrust rules around those big tech giants as those progress. Wall Street is talking about, as I mentioned, that merger with Exxon and Chevron. Again, I don't know if I put a lot of weight behind that, but it's an interesting story to follow anyway. We still continue to see M&A, mergers, acquisitions. Horizon Therapeutics out to buy rare disease drug maker Viela for $3 billion, you know, just to expand their product shelf and diversify their offerings. We've seen a lot, both in the pharmaceutical and also a lot, you know, as previously mentioned, in the energy sector as well. Canada's manufacturing index also slid to 6-month low in January, again, just falling on the US numbers. That's with the extra closures that we're seeing here in Canada as well. Obviously in BC, we are seeing closures, not as much as you know, what we see back east, but you know, that obviously affects the whole country when we talk about economics. Sorry, got a little cough. Mexican tax authority is seeking $500 million from Canada's First Majestic. This goes back to First Majestic Silver, who were operating out of Mexico. They're arguing that they artificially kept the selling prices of their silver prices low to save on taxes being paid to the Mexican government. So anytime you see rallies in any product or any market, you know, of course, there's that, you know, were you paying me enough, or did I get my share in that? So Mexico's looking at that. And again, that goes back to silver having been rallied for a while now, not just on this recent move in Reddit. I think yesterday's move was only about 9% to the positive on silver. And it was, as I mentioned, off that high today as it went down a bit. So it wasn't a massive move. It wasn't, you know, the 1,000% move we saw on GameStop. Former Bank of Canada Senior Deputy Governor Wilkins is to join Insurers Intact Board. So getting involved with Intact Insurance, pretty normal move for you know, politicians to move into the private sector afterwards. So good for her for getting on with Intact, a very large company, and hopefully it grows. On the exchange front, the euro rose against the dollar as investment bankers profit from gains in the U.S. Currency on Monday. So just movement around. Obviously, with Brexit kind of working its way through, we're going to see more movement on the euro and the pound to the positive, hopefully, as they get through their challenges. And as I mentioned before, the U.S. dollar is generally expected to have a downward trend. It did react positively overnight just on the fact that, you know, some people are, again, some short selling against the U.S. currency based on that new stimulus package, which is now potentially delayed or modified. And we also saw that movement in the bond market as well. On the commodity front, as I mentioned, oil edged up a little bit with the futures moving about 1%. And that's just on OPEC's continued you know, a commitment to keeping inventories low as we see demand not taking off, obviously, yet this year, and just looking at the longer term to see where things might reopen with the vaccine. So let's talk about this week's topic, tech industry. Obviously, a lot of questions on what we saw last year in the tech industry. Should we be buying more? You know, what areas of this industry are we looking into? Well, this is industries like no other. We want to look at value. We want to look at opportunity that isn't overpriced. As I mentioned in our first segment, or our first live one of 2021, hard to say that number over and over again, 2021, one of the areas that we see a lot of opportunity for this year is in value stocks. So companies that aren't the most sexy, that have a strong value to earnings and good growth potential. Well, that's the same for tech. Look at infrastructure. So you see all this growth happening, and you're trying to guess which company is going to come out on top. That's going to be really tough to pick. Maybe you'll get lucky, but look at the trends. What infrastructure are they using to make that happen? So whether it's cloud computing, cloud storage, whether it's 5G, right? Everyone's on our mobile, everyone's upgraded devices. Whether it's internet providers, right? Your Telus, your Bell, all of those companies have to benefit from that growth because they provide all the infrastructure and services that you're going to need to take advantage of it. This goes back to last year. Everyone heard me talk about Visa, MasterCard over and over again, and even PayPal for a short period of time there, where we did super well in those names. Was all on the e-commerce play. Who's going to win e-commerce in 2020? Tough to pick, actually. Amazon did really well. Shopify did amazingly well. But who did well? The service providers, Visa, MasterCard, and PayPal. All those transactions had to happen through those companies. And we took advantage of that last year. Well, I'm suggesting the same thing for tech this year. Look at the service providers. Look at your infrastructure providers for technology. They're the ones that have been undervalued over the last year because they don't always have the sexy brand. They don't always have the big name out there, brand name. Look at the supply chain for the technologies. I mentioned this maybe early December. We did start to invest into this last year for our portfolios. Probably in January, I certainly mentioned the electrical cars. That doesn't mean I'm going to buy Tesla. That's a great example of a brand. Is it overvalued? Yes, I could put a massive argument around that. Is it going to keep going up? That I can't tell you. Is it going to go down? Well, there's a lot of people out there hoping it does and shorten it. But that being said, there's a supply chain. There's parts and metals that are necessary and in short supply. And it's not just Tesla. It's any company out there building electrical cars. We know this is a growing market. We know that Ford, Volkswagen, BMW, Mercedes, Porsche, Nissan, name them all, doesn't matter, Toyota, they're all out there building electrical vehicles. There's massive demand. That's not even including NIO over in China, Polestar, which is a Volvo China joint venture, Rivian coming to market with their truck, the Badger truck that's being built by Nikola. All these new competition into the electrical vehicle market. And on top of that, the emissions are getting tighter, and they're going to get even faster in the US with the Democrat administration. They've already kind of telegraphed that, but you're seeing in Europe, who are way further ahead than us in North America when it comes to switching to electrical vehicles, pushing for getting rid of fossil fuel vehicles completely. The Biden administration obviously saying they're going to switch the government fleet, trucks and cars over to electric. All these things mean more electrical cars. So that supply chain, 100% is an area to invest into. If you don't want to dig deep into that supply chain and pick a name, there's some ETFs out there. CARS is a symbol of one that I like, by Evolve. They invest in that supply chain. They're not focused on the manufacturers, but on the supply chain. And that gives you, access to that growth as that moves along. So, you see the theme, infrastructure, supply chain. Where's the components coming from for this technology? It doesn't matter who's the winner of building it. What do they all need in order to build it? So, and I think that's going to be a lot of the winners in 2021 to take advantage of there. And lastly, this theme goes back at least a year: security around the technology and cybersecurity. Obviously, companies have, I won't say unlimited budget, that'd be very bold, but they have very generous budgets around cyber, the security. they cannot afford not to. Right? A cyber breach can destroy a company, and it's this constant battle between the bad actors out there investing time and money to breach security versus companies out there spending time and money to secure their information, secure their databases. And even more so as we move to this cloud-based society, which is massively moved in the last few years and only accelerated by the pandemic, where more and more data is being held in the cloud. And even if this cloud is self-managed, so if a company has their own servers, it's being accessed from employees from remote locations. It's just the cloud. It's just not on the Amazon cloud or Microsoft cloud. It happens to be on the company's own cloud. But it's all has to be secured up by softwares, by staff, by companies out there. And nothing, shows that need more so than what we saw in the United States, of course, with the recent security breach with SolarWinds down there, and just more and more money flowing in from companies as they look at securing things. So those are the three themes in technology I'm focusing on this year, and I suggest if you want to take advantage of tech growth this year, you focus on these ones. Are again, you got to look by name, you got to look at why you're buying them, but I think you'll avoid the overvaluations by focusing on these areas. You'll benefit from the growth as that growth continues, and we definitely are going to see that growth continue in 2021. And it's not necessarily technology. I'm not saying that tech is the only industry to invest into. Certainly getting the most attention right now. As I mentioned before, the theme here is disruptors. Technology has taken existing industries and helping them grow, helping them be more efficient, and helping them reach more market share through technology. So looking for those disruptors who are helping industries take advantage of the use of technology to make their day-to-day work or their day-to-day services even more effective and more cost-effective. So that's what I see for 2020 around tech. With that, thank you, everyone. Again, if you want to catch the podcast or our videos on the market bubble or GameStop in particular, go to mikeonmoney.com. You can click over to our YouTube channel and see those. You can go check out the podcasts on those, which you can also access there. It's on Spotify and Apple Podcasts, and I think one other. But with that, love to hear your feedback. Love to get any ideas that you guys have for us to cover. And as always, any questions you have or any of your friends might have that we might be able to help out with, reach out to us, give us a call, fire us an email. Look forward to talking to you again very soon. Thanks very much.